But we'll have to leave it here because we've got a management waiting by to talk about their Q4 numbers. And this is a conversation you should listen into. BEL, a company that you own, they reported their revenue, margins, profits earlier, beating estimates. The company's FY24 order book came in at 35,000 crore rupees, much higher than their guidance. Bhanu Prakash Srivastava, CMD of the company, is now with us. Thank you very much for joining in, sir. Q4 was a strong quarter. Your order inflow has seen very healthy momentum, and you've guided for 25,000 crore of order inflows next year in FY25. Where do you see it largely coming from?
This is coming from all the three services. In fact, based on the processing and all, we guided around 25,000. But the way government processed the order on high priority, many orders were supposed to come in this financial year. They were fast-tracked and we got the order in 23-24. That's how it overshot our expectations, and we clocked around 35,000 crore of order in financial year 23-24.
Okay, that's on order inflows. You've also maintained a 50% revenue guidance for next year. Now, historically, H2 is better than H1. Now, looking at the current market dynamics, how do you see growth in the first half of the year, considering there is also elections which are currently underway?
Normally, in our type of business, H1 is slightly lower than H2 because we have to mobilize. Systems are not, we are not able to what you say that streamline or are not able to integrate the system in a very short time. So what we do in Q1 is what were already going on in Q3 and Q4 and get cleared. Still, we expect around 15% growth in Q1 as compared to what we did Q1 last year.
Okay, all right, sir. But what are the key growth opportunities in the non-defense space? Your non-defense sector contributed closer on, I think, 15% ballpark of your revenues. And in FY25, you aim to maintain the same. In the long term, by what percent you plan to scale it up to?
I think that our defense to non-defense will remain in 85-15 in this range. Because even though we are putting a lot of effort to diversify and scaling up in non-defense, defense is also increasing at equally fast pace. So non-defense will remain. Some of the area where we are working very hard in non-defense are airport surveillance radar, air traffic management system, metro solutions, railway business, and then cyber security solutions. These are the area, homeland security, smart city business. These are the area where we are concentrating on civilian sector. Similarly, that perimeter security system for various applications. These are the area where we are concentrating in non-defense sector. But in my opinion, defense and non-defense ratio will be in the same range because defense also is increasing with the same pace.
Mr. Srivastava, you've guided for 23 to 25% EBITDA margins. That's the band you're talking about. So what are the key drivers for margin expansion that you expect this year? And what is the profile of the non-defense business and the defense business? If you could just give us the breakup.
Segment-wise margin profile, normally we don't do, but overall 23 to 25, seeing the current product mix, we anticipate this margin. It's basically because of better efficiency, operational efficiency, project management, and then indigenization, alternate sourcing. These are the factors which affect or which improves the margins.
Okay. Talking about large ticket size projects over FY25 and FY26, what are the big orders in your current pipeline or in the order backlog?
In FY25, what we have anticipated guidance we have given of around rupees 25,000 range. There we have not considered very big ticket item like QRSAM because the way values of QRSAM are there and even A1 has not been taken. We are giving input to defense for services. We expect QRSAM to materialize in 26 financial year. So in 24-25, it's mainly routine type of business, which will be few of them will be in the range of 3,000 to 2,000 crore, and most of the products will be in the range of 1,000 crore to 100 crores. But it will be a large number of products and spares and line items. It will be.
All right, sir, but you're targeting close to around $110 million turnover from exports in FY25. Could you tell us which regions will largely contribute and which project profile will this be?
Exports are normally in two categories. One where we do the offset business and subsystems manufacturing for our global partners like Thales and others, and also product going in some offset obligations. Another is that where products like radar and electro-optic system, coastal surveillance system, we export it to friendly countries. So both taken together, it will be in the range of around $110 million in financial year 24-25.
Okay, just a question on geopolitics as well. You've reduced your exposure to Israel quite significantly, I believe. In the conference call, you've mentioned that the impact was minimized in Q4. Can you just give us some more details there? What is the outlook and what linkage may you still have, if any?
If current situation continues, impact will be minimum because there were logistic and supply chain issues we faced immediately after that starting of the war in October. So it took some time before our OEMs, they made the alternative arrangements and established the alternate SOPs to take care of supply chain issue. So it did, there was a spillover from supply during Q2 and Q3, but largely we were able to overcome in Q4. Remaining whatever challenges are there, both BL and our partners, we are working to eliminate that also, so that to a large extent we are able to address in this financial year.
Okay, one final question, sir. You've entered into an 850 crore rupee contract with L&T for the supply of communication and electronic warfare, sensors and systems. What's the key execution timeline for this particular L&T order, and what are the margins you're working with?
Normally, product-wise margins we don't specify, but definitely for their cadet training ships and multi-purpose vessels, we are giving many equipments, and the supply will be based on their delivery schedules for platforms. So, starting from something in this financial year to next 2 to 3 years, it will be completed.
Okay, all right, Mr. Srivastava, we leave it on that note. Thank you very much for joining in, and good luck for the year ahead. We will take a quick break on that note. We'll come back on the other side, get you a check on what the buzz is in dealing rooms given today's mega rally, and of course some final trading calls as well.